guys, welcome back to my channel. My name is Noguhle Kumala and today's video is all about the repo rate. I don't know if you guys keep up with current affairs, but you would have seen that the repo rate in South Africa has been cut drastically. So apparently it's the lowest it's ever been in 47 years, and a lot of us are really confused, like does it really affect us normal people, or is it only for people in parliament, and so on and so forth. So hopefully this video will clear up any misunderstandings or confusion, and if you do have any more questions, please do drop them down below in the comments. I'm sure someone will respond if they know how to. I'll also try to respond. Okay guys, I'm going to do this video in 3 simple steps. First, I'm going to tell you what the repo rate actually is, and then I'll tell you how it affects people like you and me, like in our everyday lives. And then lastly, I'll tell you what you can do to prepare for certain things in the future. Hopefully it does help. Remember, my videos do not constitute financial advice, so please don't take them as that. Do take whatever I say with a pinch of salt. Do your own research, and by the way, I do have timestamps in the description box, so just click below if you want to jump to certain parts of the video. But hopefully this video will be really short so you can watch the whole thing, right? And I will also link my sources just so that you can do your own external research if you want to. All right, let's go. So guys, the repo rate is actually short for the repurchase rate, and that's just the rate that the South African Reserve Bank borrows money to commercial banks. Commercial banks include banks like FNB, Standard Bank, Capitec, all of those banks that we are familiar with. So what happens in South Africa is that our money is essentially managed. Everything comes from the South African Reserve Bank. Every coin, every note has been generated in the South African Reserve Bank, and then they're distributed amongst the different commercial banks. Okay, so Reserve Bank and then commercial banks. Cool. So what happens in South Africa is that when you go borrow money from FNB might have money within their facilities, but if they don't, they have to go and borrow from the Reserve Bank, so they have to go up. So the repo rate is the rate that the Reserve Bank will charge the commercial bank for giving them money. So what happens is that when the Reserve Bank charges FNB, Standard Bank, and all of those commercial banks a rate, those commercial banks have to charge a higher rate to us when we borrow the money so that they can also make a profit. So basically what this means is that when you go and borrow money from your commercial bank, the commercial bank might also need to go and borrow money from the Reserve Bank because they don't have enough within their reserves. So the rate that the Reserve Bank will charge the commercial bank will always be lower than what the commercial bank charges you. Because remember, a bank is still a business, so they also need to make money. So if the Reserve Bank is charging them, let's say 4% interest, they'll come and charge you 7.5. And then that 3.5 gap, that 3.5 margin is how they make their profit. So when they tell you that the repo rate has been cut, it means it's cheaper for the commercial banks to borrow money from the Reserve Bank. The Reserve Bank is charging them less interest, which means the commercial banks can also charge us less interest. Because if you think of just a normal business, if your supplier drops their prices, you can also drop your prices, so your customers have to pay less. So I'm just going to make an example. So think about Mr. Price. When Mr. Price sells you their t-shirts, they probably charge you like 80 Rand, and that's because they get the t-shirts from their supplier for 40 Rand, okay? But if the supplier suddenly is like really cheap and they're only charging Mr. Price 10 Rand for each t-shirt, Mr. Price can also drop their prices to only 50 Rand. So you'll go from paying 80 Rand for a t-shirt and you start paying 50 Rand. So you see, just because the supplier dropped their prices, they can also drop your prices, and you end up paying less. So yeah, that's it. The repo rate is just the rate that the Reserve Bank charges commercial banks. Now let's talk about how this affects us normal people. So as a normal person, you either owe the bank or the bank owes you if you save. So firstly, let's talk about what happens when you owe the bank. This is usually if you have a loan, if you have a mortgage through the bank, or if you've bought a car or something like that. So if you are someone in that position, you owe the bank and they charge you interest, right? But because of the drop in the repo rate, that means that they can drop the rate that they are charging you. But this must be mentioned. This only applies if you have a variable interest rate. So if you are someone who has been paying interest according to the variable interest rate, or if your rate has been calculated using the prime interest rate, then you will be affected. And let it be known that usually banks will charge you the prime rate, so it's like a standard rate that they charge if you are someone with good credit. So if you haven't checked out my video on credit scores, you should really check it out, because if you have a really bad credit score, this might not really work in your favor, because even if the repo rate does drop, they will not drop your interest because you are still a high risk person. But if you're someone with good credit, you pay on time, everything is top notch and you have followed everything I said in the video, then the repo rate cut might benefit you. So I don't know if you guys have checked your statements, but I know my bank definitely did send me an email about my card to let me know that, listen, because of the drop in the repo rate, XYZ, blah, blah, blah. So because this repo rate cut was announced on the 23rd of July, you will probably only see the effects of this drop in August and coming months. The reason for this drop is because they're trying to stimulate economic activity. So what that means is that because they are charging you less interest, they are hoping that that money that you're saving, you will go and spend more. I'm not sure if you guys saw, but I know my boyfriend was reading an article and it was just saying that retail markets are not doing well at all. So like retail shops, clothing stores, all of those shops are not doing well during the pandemic because I think a lot of people are tight for cash. So no one is really spending as much as they usually do. A lot of people want to save because we're not sure what's going to happen. People are losing jobs, they're getting retrenched and so on. So by the drop in your interest, like for your mortgage or your car, they are hoping that that little money that you save, it's not going to be a lot, trust me, but it will be something. They're hoping that you will take that like little money and go and buy a t-shirt, some lipstick, some makeup, maybe some new rims or whatever to drive the economy up, because our economy is struggling because of the whole lockdown. Cool. So as a borrower, as someone who owes the bank, you are in a really good space. Congrats to you. Lucky for us. See ya weed. So now for the people who save. So if you've saved some money and you've put it away through a bank, maybe through a fixed deposit, variable interest deposit, what else do they do? I don't know the different saving things of banks, but like if you've put money away, a drop in the repo rate might be unfavorable for you. So you are at a disadvantage. Right now, it is expensive to save. You are better off not saving. I'm not saying stop your savings. No, you can keep them there. But what I'm saying is, if you don't need to save, if your emergency fund or whatever you're saving towards is safe, rather just leave it and rather enjoy your money, because saving right now is not going to reap you the best rewards. However, if you have saved through a fixed deposit account, your amount will not be touched, and that's if you opened it before Corona. So like the word says, fixed deposit, it's a fixed interest rate. So if they told you, okay, we're gonna give you 4% interest, it's fixed, it won't change. Whether Corona happens, Jesus comes back, it will not change. You will get 4% interest. However, if you are saving on a variable interest rate, which is what most people save in if it's not a fixed deposit, then your savings will be affected and you will be getting less interest than what you're used to. So if this is like a long-term saving, then maybe you need to readjust your goals. Maybe you need to save a lot more so that you actually reach your goal within your required time. Maybe speak to your banker or financial advisor just so that you can know what you need to do to ensure that you don't miss your goal if you're really crazy about your goal. Cool. But if you don't owe the bank and you're not saving through the bank, this drop in the repo rate can still be favorable to you, because it might mean that we won't experience a lot of inflation or none at all. So there are a lot of mechanics and mechanisms that go towards calculating inflation, but it does have a lot to do with the repo rate and the demand of money and the supply of money. But what you need to know is that you can be at ease and know that your groceries will probably not rise in price, so you'll still be paying the same amount, if not less. Your clothing stores and your makeup and accessories will still also be the same amount, or you can actually get them for cheaper. I don't know, when I went to my local mall, the prices were ridiculous. Like there were sales almost everywhere, but I don't think that's because of the drop in the repo rate. I think that's just because a lot of stores are suffering because of the pandemic. Not a lot of people are spending money, like I said. So I think the sales are just like a side effect of the pandemic and not so much the repo rate, but they may drop even more. So if you have been eyeing those sneakers or that makeup kit, maybe this is the time for you to buy. And now lastly, the future. What can we expect? Okay, so because the repo rate has dropped so much, it has actually become super cheap and super easy for you to get credit. So if you've been planning to buy a house or to buy a car, right now might be the best time to do it, because firstly, with your house, you will probably get 100% mortgage loan. So I don't know if you guys are aware, but when you're trying to buy a house, usually you have to put down a deposit. Like you need to show the bank that, hey, I've saved up enough money. Can you please just put in the rest and I'll pay you back later. But now, because the repo rate is so low, banks are just saying, come through. Even if you don't have the deposit come through, I might give you the money. But with buying a house or buying a car, please be very cautious about making impulsive buys. Just because I said it's cheap or it's a great time to be buying, it doesn't mean you should just go buy for the sake of buying. Like, if you do not have the money to buy, then don't buy. If you will not be able to continue paying those installments after the pandemic, because guys, hopefully the pandemic will end. I'm really hoping it ends soon, but it will end and the rates will rise again. So if you are not going to be able to maintain those payments, maybe don't buy. It's a great time to buy, but if you have the money. If you're new like me and you're starting out, a little, ease up on the big costs. So I know FNB, there's this article that I read where FNB is actually willing to give you like R1 million loan to buy a house, and you'll pay like an installment for like 7,800. And if you're someone who's renting, you'll know that our rent usually does come up to that amount, if not more. So if you are someone who is renting, maybe buying is not such a bad idea. But obviously, like I said, if you're not in the financial space to buy, don't buy, because houses take a long time. It's not like a car. A car is only 5 years. A house is like 20 sometimes. And if you are considering getting a car, please do check out the video that I did make, and maybe you can pick up some tips before you make a big decision. Alright guys, and lastly, with the repo rate, when you can see that the repo rate is going to rise, when you have heard little rumors that it's going to rise in the next month or so, do your best to try and pay off your interest payments now. Like, if you can pay the interest portion as soon as possible, do that, because remember, with the repo rate being low, they're charging you less interest. So if you can pay that interest up now, by the time the repo rate rises again and your interest also rises, you would have settled your interest payments and you'll just be paying back your capital payments. But if that doesn't really make a lot of sense to you, don't stress about it. All I'm saying is repo rate has been cut. It's a good thing for us. The economy is hopefully going to start booming again because we need the money. And I know it is a really sad time because the pandemic has hit a lot of us really personally, but I really do hope that you guys are keeping safe. Please do make sure that you are social distancing and wearing your mask. And guys, remember, this does not constitute financial advice. Take it with a pinch of salt. All right. Thank you so much, guys. Bye. If you enjoyed this video, please do check out my other videos. I have a whole playlist on how to adult. It has things like how to buy a car, how to choose an apartment, how to prepare for your interview, and anything and everything you need to be an adult. And if you want something fun, maybe do check out my vlogs, my nice videos with my friends and my family, and hopefully I will see you guys next time. Don't forget to subscribe and do turn on the notification bells. And please guys, if you do have any requests, drop them in the comments, send me an email. Whatever you do, keep safe. Love you all.